We're now reconvening the public session of the Finance, Capital, and Resources Committee. I will ask Suzanne to confirm we have a quorum. Thank you, Suzanne. We have a full agenda today. So our agenda includes proposed 2022-2023 base tuition and mandatory fee, differential tuition, college fees and all academic fees, and residence housing and meal plans rates discussion. We also have in our agenda the annual sunset review of fees for the 3 universities, proposed policies revisions, review of sublease between the University of Arizona and the University of Arizona Applied Research Corporation, the annual review of the public safety personnel retirement systems assets and liabilities, a pension plan amendment, and review of Second Amendment multiple-year employment agreement for U of A Vice President and Director of Athletics. Please remember that only members of the committee can provide a second to a motion and can vote on a motion. And of course, all the questions and comments are well received. And please remember to speak clearly and into the microphone. We are live streaming this meeting as a public meeting and it is available on our YouTube channel. You can find the link at our ABOR website. The first item and our first order of business is approval of minutes from our meeting of the November 4th, 2021 Finance, Capital, and Resources Committee. Are there any questions or comments related to the minutes? Hearing none, I move the committee to approve the public and executive session minutes from the November 4th, 2021 Finance, Capital, and Resources Committee meeting. Is there a second?
Second.
Thank you. All in favor, say aye. Aye. Any opposed? Any abstention? Motion carries. We have item number 2, which allow for discussion on base tuition, mandatory fees, differential tuition, program fees, class fees, other fees, residence housing plans, and meal plans for the 2022-2023 academic year. In prior years, the discussion took place during the annual tuition workshop. Today, we have an hour scheduled to discuss the proposals. This is really very compressed, so we will try to make it, timing very accurate if possible. So we will have, we'll ask each university to present their plans. But first, we will start with an overview from ABOR, and Lorenzo Martinez and Gail Tebu will provide the overview in this presentation. Lorenzo, the floor is yours. Thank you.
Thank you, Chair Mata, Regents.
Can I ask you to hold your thoughts? Sure. Since we have 1 hour and maybe a little bit more, all the questions that we might have with Lorenzo, can we do it through the presentations of each university? Because that will probably give a better picture once they present. And if you hold those questions, we can provide that through each university. Okay, thank you, Lorenzo.
Thank you, Regent Mata. First, I'm going to take hopefully 10 minutes to blow through a lot of the basic information and the proposals, give the majority of time to the individual universities. I do want to start off with big thank yous to the university staff who every year put a lot of information together for us. Thank you to Gail and Lita from our staff who take all that information and try and compile it and make sense of it for presentation. So with that, next slide. Some basic information here. As many of you are aware, the Arizona State Constitution has 2 important requirements to university funding. The first is noted here where it says, it obligates the legislature to appropriate funds to ensure proper maintenance, development, and improvement of all state educational institutions. And then the second one, which gets a lot of attention, is that instruction should be furnished as nearly free as possible. This is also reflected in our board policy. Throughout the year, the board receives quite a bit of information through a number of reports. I won't go through these, but you can see all the reports that come forward that have a lot of information. So throughout the year, there's just information coming through that gets us to this next to last item here on this thing in April, where we head towards tuition setting. And then the final step in our calendar is adopting university budgets. Next slide. Also in board policy, we've got guidelines established for the board to consider when setting tuition. I won't go through these either, but there's a lot of information that gets in the materials. All of this is provided in that thick book. One thing I'll note here is item 3, where we speak to the median of tuition and mandatory fees charged by peers. We need to update that. As you all know, we've sort of been working on what the best comparisons are for our universities. So that's for a future project. Also in board policy and in statute, it's outlined what the board needs to do relative to tuition and fee approvals, and this lists those items that the board is required to approve. Next item. So starting off, this sort of shows each university's budget, the main components of university budgets. We put this in here to highlight the fact that that second bolded line, net TNF, net tuition and fees, has become a primary component within university budgets. And in particular, when you look at the academic mission of the universities, it is the main funding source that the universities have for pursuing their academic mission. Next slide. So heading into the meat of these proposals, ASU-based tuition rates, they have 12 different campus tuition rates, 9 undergrad, 3 graduate, and then they have online rates for undergraduate and graduate. What we show in the tables here are the increases for the main enrollment parts. For the universities, what we don't show are some separate rates for example, for the Polytechnic and the West Campus in Lake Havasu. When it comes to fees, there's nominal changes to the financial aid trust fund, which is part of the mandatory fees, and it's based on a percentage of tuition, and this year's increases range from $2 to $3 per university. As you know, ASU has a college fee structure, and for those college fees, that increases 2.5%. And then there are a number of undergraduate and graduate fees that are increasing. Next slide. NAU also has a number of campus-related tuition rates. They have online tuition as well. And for NAU, they have unique personalized learning subscription rates. One is for general students, and then the second one relates specifically to nursing. Again, the table there shows the proposed increases where, for resident and non-resident, it's 3.5%, international, a little over 7% increases. When it comes to fees, again, the nominal increase in financial aid. NAU this year is eliminating 563 fees. They will convert those to a college fee structure similar to ASU's. ASU has 4 college fee tiers. NAU will have 3. Next. U of A. Again, you see similar summary information on the various rates related to campuses. For U of A, their online programming is called UA Global. They offer separate rates by degree program. There's about 3 or 4 dozen established degree programs. This year, they will be adding 9 new undergraduate, 6 graduate. There's a typo there, I see. But again, for U of A, the resident Tuition increases are 2% and non-resident at 5.6%. Again, nominal increase to the mandatory fee for financial aid. Student services fee and health and recreation fees are increasing. In total, those three fees is a $313 increase. And then there's a variety of changes related to new fees and increasing fees. This is a very, ignore this slide. The main point of this, the gray bar sort of shows CPI, the way inflation has been since 17. And then the color-coded lines show the resident-based tuition increases. The dotted lines are trend lines. The main takeaway here is you can see that university increases are trending downward, inflation trending upward. In 21 and 22 in particular, we had 0 increases to resident tuition rates, while inflation rates were increasing. So we have proposals of increases from all three universities, and that raises the question of how much money does that generate? But before we can get to that, we need to look at what their enrollment is looking like for the coming year. And again, all of this information is included in the packet, and we've tried to sort of bring it forward. The main item I would highlight is the third from the bottom row that says net change. You can see that for ASU, the projected enrollment change is almost 4,600 FTE increase. The majority of that is non-resident students, and as you know, they have higher tuition rates, so will generate significant funding for the university. NAU, you see a reduction in enrollment of 858. For U of A, an increase of a little over 1,500 FTE. Again, U of A anticipates having significant revenue increase because the majority, they're anticipating a big increase in the non-resident portion of their enrollment. So based on those enrollment projections, we look at what that looks like for tuition and fee revenue. The top section of this shows base tuition amounts. Again, I would direct you to the percentage of base tuition rows. That first part, the last two rows, that shows you for each university, that last line, again, on how much of the new revenue is coming from non-resident students. So for ASU, of their $143 million in additional revenue, 56% of that will come from non-resident students. NAU, they have an increase for the incoming class. One thing to point out is, as you all know, NAU has a pledge program. And so when it comes to the rate increase, that additional revenue is only coming from the incoming class. And you can see here, that middle row, there's 5.5 million coming. But after you factor in the enrollment change, again, you recall they estimate losing a little over 800 students. There's a loss of revenue there. So in net, I think for NAU, they're sort of breaking even revenue to expenditures. U of A, I don't recall if I mentioned that. Again, there's significant revenue because their enrollment growth significant from non-resident students. So, sorry, can you go back out? So that top chart shows revenue, tuition and fees. That middle section shows what each university will sort of use for financial aid. So in many ways, that is foregone revenue. And that fiscal year 23 net incremental tuition and fee revenue for ASU, $136 million. That is new revenue they will have, they anticipate having in the coming year. For NAU, $70,000. For U of A, little over $53 million. Sorry, Bill.
Oh, sorry.
And then the
keep
final
going.
section here is just, the two main funding sources for the academic mission are tuition and fee revenues, and then state appropriations. We do not, at this point, based on the executive recommendation, we, for the most part, anticipate a fairly flat budget. There's some technical changes in there, but essentially that recommended converting some one-time funding in this year's budget and continuing that as ongoing funding for the coming years. So even though it changes from one-time to ongoing, our budgets will essentially remain flat. Next slide. So just to give some context here, E&G, it's sort of an industry measure of expenditures for the academic mission of universities. When we look at four-year public research universities compared to our universities, we're 13% below these public research universities. When we look at all four-year public universities, we're 2% below. And then finally, the last items that the board
Sorry, Regent Pacheco have,
Just very quickly, are you talking about tuition? So 13% below the average tuition?
so these are expenditures of universities
so we're
per student.
Okay.
So we're below on our, we spend less than the average of
Essentially
those.
an efficiency measure.
Right. So I just want to
Yes.
be clear on.
Yes.
Okay.
thank you.
Thank you.
And then finally, just quickly on the housing and meal plans for student housing at ASU, average increase of 3%. Then sort of the third-party housing, also 3%, and then meal plans, they're requesting a little over 4%. For NAU, again, in the 3% range for housing and meal plans, just under 4%. And finally, for U of A, 3.5% in their housing, and no increase for the current meal plans. One thing to note is they are requesting approval for not the coming year, the year after that, to implement a mandatory meal plan requirement for students living on campus in university housing. And that concludes our presentation, Madam Chair.
Yeah, thank you very much, Lorenzo. And I will ask everyone who has questions to hold it until each university can present, unless it's really critical for answering that now. So do we agree? Okay, so thank you very much, Lorenzo and Gail. And our next, President Crow and Morgan Olsen, please provide your remarks for ASU, and the floor is yours.
Thank you, Madam Chair. Let me start by first reviewing some historical contextualizations for the regents that are new to the board and haven't been through the process before. And there are 4 items that I'll quickly go through relative to that. First is the tuition theory that ASU operates under. Tuition theory for ASU is that we have to build an institution which is simultaneously accessible without financial barrier and fantastically excellent. That is equal to, in terms of the product that we produce or the faculty that we have or the institutional programs that we have, as excellent as can be. This is an unbelievable challenge. We have to produce graduates from our schools equal to the graduates of Stanford or Berkeley or UCLA or Michigan or any other school, and we do, but we have to do this on the thinnest dime that we can possibly use to make this happen from an accessibility perspective. So our tuition theory is accessibility and excellence built into the same design. Our tuition model is one in which, when I got here 20 years ago, the tuition model was no financial aid, essentially, and very low tuition. The institution was not successful. We had a 28% four-year graduation rate. We had lower levels of excellence than we've been able to achieve since then. We had a student body which was not representative of the socioeconomic diversity of the state. We were not operating at the level of excellence that we needed. So we changed the model from low tuition and low financial aid to modest tuition and high financial aid. So the tuition theory, accessibility and excellence, the tuition model, modest tuition, high financial aid. Now, the state of Arizona doesn't invest many dollars in financial aid, so therefore the university must financially construct itself and design itself where it's generating the resources for financial aid. Very much the way private universities operate. We operate in that same modality. So modest tuition, high financial aid. The tuition design, the third component. So tuition theory, tuition model, now tuition design. The tuition design presented to this board now more than 10 years ago is that Arizona State University would use every tool, every asset, every mechanism that it could to ensure that in-state tuition would be kept at the lowest possible level, as close to free as possible, well below our cost, well below our price, our market value, well below. That this tuition design would put in place a mechanism in which we would not increase tuition for in-state students by more than 3% per year, initially for a 10-year period, met, and now we've agreed to that for a second 10-year period. And our logic here, our financial logic here, is that gave predictability. It kept in-state tuition low. It also kept our in-state tuition the lowest among the three sister institutions. So this was a financial model that we constructed 11 years ago. Our proposals are always within the construct of this tuition design. Over the 10-year period, our average tuition was between 1.6 and 1.7%, very modest, less than inflation, drawing from efficiencies in the design of the institution, the scale of the institution, and the attractiveness of the institution because of excellence to students from outside of Arizona as well as international students. Just to remind the Regents, we are the #1 public university destination for international students in the United States. #5 among all universities in the United States. There are 4 privates that are ahead of us. This is a huge financial element for the institution. It's also a huge indicator of our actual market price. So for those Regents that want to look at this notion of what is our in-state tuition? So our market price is the highest price that we charge in the market for a person willing to come to ASU, which according to our proposal now is well above $30,000, $34,000 for an international student. That's our market price. Our in-state price is 1/3 of that, which is well below our cost. And our net price for an in-state student after gift aid, no loans, is almost 1/10 of the market price. We believe, and I say this with every analytical rigor that you can possibly imagine, we are as close to free as possible. We're as close to free as possible, and we're promising to keep that way going into the future. So tuition theory, access and excellence, tuition model, modest tuition, high financial aid, tuition design, never more than 3%. But let me also add, even relative to international students and out-of-state students, we've decided that we would structure ourselves financially, also because of our design, our efficiencies, our scale, our programs, our markets, and the way that we work. We would design ourselves to basically be at the average level of international student tuition among competitor universities and the average level of out-of-state tuition among competitor universities. And that's how we operate there. So very quickly then, outcomes. So here's our outcomes. We have the lowest tuition in the state. We have the lowest tuition for a person to pursue a bachelor's degree that's a resident of Arizona. We have the highest enrollment that we've ever had, so we don't have a market issue. We have the largest number of Arizona students that we've ever had. We have over 40,000 Pell eligible students attending the institution right now. So we've changed the entire dynamics. The student body is representative of the socioeconomic diversity of the state, and we doubled our 4-year graduation rate while advancing university from an excellence perspective. So, and in that context, our proposal for this year, very quickly, as the Regents have already seen in the document that we put together, is, as was outlined by Lorenzo, a 2.5% increase in in-state resident tuition, but with the ongoing commitment that no in-state student will be denied access to the institution for financial reasons. How do I know we do this? Because we spend millions and millions and millions of dollars to ensure that. And what evidence do we have that it's working? enrollment from Arizona, graduation from Arizona, socioeconomic diversity of students from Arizona. We have 5 times the number of students from families entering our first year class, 5 times than we had 2 decades ago from family incomes under $50,000. 6 times, actually. 6 times as many. And so we know that this is working. So a 2.5% increase in resident undergraduate tuition, a 4% recommended increase in out-of-state students, 5% in international students, and we have also some graduate student differentiations. And then we have a very modest increase in our digital immersion. The point is that the commitment that we made to the board 10 years ago was that we would maintain this model of access for students from Arizona. What I can say is 10 years into this, the 11th year, not only is it working, but it's working fabulously because we can see by our outcomes, the students, who they are, who comes, who graduates, how successful they are. And so we're consistent with our 10-year ago commitment that we've now extended for an additional 10 years. And we're confident. I sent to some regents leadership within the last week where we are in terms of enrollment requests, applications, off the charts. It's unbelievable, off the charts. And so we are seeing that the institution's pricing structure, accessibility indexes, excellence indexes, programmatic interest areas, the things that we've got going on are working and working well. So I'm also reporting to the regents, reporting back 11 years into this, that the model that we put in place 10 years ago is working, and it's working well. And we're maintaining this low tuition position and high accessibility and high performance. So, Madam Chair, thank you.
Thank you, President Crow. Any questions? Regent Herbold?
In the context of the world today, where if I were to guess in terms of your salary structure for the next 12 to 18 months, you're going to have to generate raises, I would assume, in the 4 to 5% range, but that's a guess. Maybe you operate that differently, but there is a number. It's probably bigger than 2.5. You look at your cost buckets in terms of other revenue besides the tuition. You've got grants, which hopefully will be going up, and other components. On the cost side, the world is heading toward a real mess in terms of cost structures. Not only employment, which we've already talked in terms of what you're going to have to do for salary, but in terms of feeding people, housing people, keeping the lights lit, et cetera. These costs are going to go up, if you were to guess, and when you put your budget together, you're going to have to put the pencil to paper, but I would guess you're going to be in the 5-6% range. So where do you cover the shortfall?
Well, I can't tell you how much I appreciate that question, Regent Herbold. And I'm going to give a structured part of the answer, and I'm going to turn to Executive Vice President Olson, Dr. Olson, for his comments. So one of our strategies in all of this is the scale of the institution and the speed and the agility of the institution in various markets, including in particular the online market, which has a different margin basis on which we are able to operate. That part of our enterprise is accelerating fantastically, providing for us the kinds of some of the revenues that we need to move forward. We are raising more money philanthropically. We are raising more money from our real estate projects. We are generating additional revenue. But you're right when you say this 5 to 6% number. Now, we don't impose on ourselves the standard logic if we were a business. We've got to raise our prices to keep up with our costs because we can't. It's not in the logic of the design of the moral position that the institution takes. So the burden, and I'll come back to salaries in a second, the burden of figuring out how to operate all this falls on to Morgan and his team. And right now we are doing very well at managing 30 or 40 very complicated parameters. I'll give you one very, very challenging thing for us. Our net loss for in-state students, with every dollar of tuition paid and every dollar from state appropriations as if it was used for students, which some is not even designed for students, it's designed for capital. our net loss is above $250 million a year. And that's something that we've become accustomed to managing in the financial design of the institution. We are going to be raising salaries. We have raised them last year. We're going to be raising them again this year. So Morgan, why don't you just talk very quickly about salaries and so forth. I do want to say something relative to grants. So grants, unfortunately, are not net positive revenue contributors to the institution. They're actually net sinks. And so there is no research activity that we're involved in that pays its way. And so it's a very sensitive area of engagement. And so, Morgan.
Sure. So at a very high level, I think I appreciate the excellent question. Because of the nature of our mission, being a major research university, as President Crow just indicated, because of our commitment to access and affordability, we don't seek to maximize revenue in an economic sense, which makes it very challenging. And so what we look to do essentially is that our institutional economy is based on growth, but it's also based on various strategies that allow us to be more cost effective as we grow. And that's a lot easier said than accomplished, I can assure you. We have excellent leadership. We've got excellent management across the institution. The team understands this about how it has to work. And, many times people, have perfectly logical, rational, well-supported arguments for why, we might need to be more aggressive in terms of allocating, additional resources. And we can't always do that in order to make this work. You asked about human capital, people. It's our biggest expense and probably our most important asset, at least in my opinion. You get every year, benchmarking information from us for faculty that are, generally national studies, for staff, depending on the level, usually local market. In some cases, it's more of a national or global market. But there's one commonality, and that is that we definitely are a little bit less than the median on those things. This year, if we were to bring all compensation across the institution up to the relevant benchmarks for particular groups, it'd cost us about an additional $90 million annually. And that's something over time we'd like to do for the reasons I mentioned earlier. But we're gonna have to figure out how to do it, but I think by becoming more cost effective. I don't think the state is gonna say, well, yes, here's another $90 million and we're gonna give you that every year. So we have to have another model for addressing that. Our institutional investment in student aid, continues to grow, and it's over $500 million a year. The difference, if you look between our gross tuition fee revenue and our net after factoring in the institutional investment in student aid, is quite substantial. But again, that's related, to mission. I would say
99 of our 100 competitors have the state picking up the financial aid numbers that we finance within the structure of our own institution.
yes,
So it puts us in a very, very complicated, unique position.
And with respect to the, what we see coming, I think one of the big questions is, what's going to happen with prices overall. You've seen the most recent data on the consumer price index shows costs growing at an annualized rate of over 7%. One of the questions, there's a lot of things going on in the world right now. No one knows exactly where that's going to go, how long it's going to last, but it's definitely pushing those numbers higher. If you look at energy and food, on an annualized basis, it's growing far in excess of 7% annually. And so, if you look at the room and board rates that all the universities have proposed, what that means implicitly is we're going to find a way to be more cost effective, because if you were just passing through what looked to be the cost increases for the next year, those rates would have to be higher.
Which we never do.
And we don't do that for the reasons that we mentioned. So, I think, for ASU, what it means is we're going to continue to have to do some of the things that you heard President Crow and others talk about in our OFR report a few months ago. We have to continue to find ways to leverage technology, again, to become more cost effective. We're doing that in sort of the core essence of the university, teaching and learning, the use of technology, both for our campus immersion and our digital immersion students is absolutely essential. In fact, some of our big debates internally right now are, how do we deploy the resources that we have to do that? And, how much should it be within the, the context of our overall budget parameters?
Let me add one data point on that, Regent Herbold. So it used to cost us several $1 million a year to teach one course in mathematics for first year students. Our technology that we've invented ourselves, and we're spending $65 million a year to advance, just to give you some sense of that, has lowered our cost by 50% and enhanced our outcomes by more than that. And so we've been applying inside the institution the replacement of the old model. And so right now, imagine that we're sort of like the surfer that's in the wave, with the water over. We're still on the surfboard, and we're still making more and more progress, and we're building this new way of doing things as we move along. So our efficiency indexes, even in academic programs, are up dramatically. We reduced $25 million in the expense of academic administration by altering the design of the academic structure. It took out $25 million several years ago from those costs, which were just being absorbed in the way the institution was operating. So we've been doing and are continuing to do all these things to make this institution work.
Two last quick points, and I'll stop. One is that we are spending down the last pieces of the money that came from the federal government, to kind of get through the economic impacts of the pandemic. So that's one-time money, and it's in the process of going away. So we're assimilating that as well. And then finally, and I think this is the big picture thing, if we were passing through the impacts that we expect to come from higher inflation and some of these other factors, to your question, our proposed rates of increase for tuition and fee would be higher. But we're not doing that because we're going to have an imperative to figure out how to become more cost effective so that doesn't happen. And the reason that we're doing that is because we want to make sure that an ASU education is accessible and as affordable as possible, for students.
The engine called international students becomes very, very important. But most importantly, the online machine has to operate very well in terms of generating that incremental income, which is the source of a lot of help in terms of your model, if I'm understanding you correctly. Yes. And what that leads to, and I think this is your design actually, is to a different kind of university. One that isn't so much in residence, based as it is a remote, all-purpose, broader institution, which one could argue from a traditionalist standpoint is risky in terms of if you compare yourself to the vintage, you and I have discussed ratings before, but this isn't a model that fits the rating model at all, and that's okay if we think it's the right thing for the future, which you obviously do, and I tend to agree with you in terms of the reality of the dollars is going to push you in this direction. It should be pushing all schools, but it's impressive what you folks have done in terms of turning the corner on some of these things and putting big dollars against the tools that will enable you to do the kind of thing we're talking about. You've talked about the vast investment in online course preparation and the like. All that gets put in a spotlight when you talk about the finances of how this thing is actually going to work. It's very impressive. So that's a helpful description and one I appreciate. So
let me make just one comment. So the two largest single administered universities that are not systems in North America are the University of Toronto and Arizona State University. And so we next year will have, I would guess, I don't see our enrollment folks here, but just under 80,000 students full-time with us on campus in full immersion programs. And the University of Toronto is a few more than 85,000 students. Those 80,000 students that are here, just to be clear, their education, like Regent Dave sitting next to you, is as intense and as immersive as any place, anywhere. It's just greatly enhanced by technology
Yeah.
that allows for certain kinds of efficiencies. And next year we will have between 85 and 90,000 online degree-seeking students also taught by the same faculty, which is a point that I've made, using these technology tools. And so that's sort of the unique thing that our team has been able to accomplish. But there's no diminishment in the on-campus full immersion learning environment. If anything, it's been enhanced with these technologies, which allows a lot of different things. And then you said it correctly, financially, it has to work. So I know that from a couple of questions that came from the last Regents meeting about our Sintana network, we're not building universities around the rest of the world. We're partnering with other universities around the rest of the world in which their top students will ultimately, from our relationship, come here to complete their undergraduate degree, come here to finish their master's degree. So we're hedging by the building of 50 relationships, uncertainty in the international student market. So we're not going to just sit back and wait for the world to become more conflictual or deglobalize or something. We're advancing with every tactical response that you can possibly imagine to hedge these uncertainties going forward. And we think that in the long run, what we're seeing is that these are working.
Yep. Absolutely impressive.
Thank you. Do you want to continue, Morgan?
There's no
Yeah.
more continue unless there are additional.
Okay. So any other questions from the regents? Okay. We move our next item with President Cruz Rivera and Bjorn Flagstad. Please provide your remarks. And President Crow, thank you so much, for all that background that you gave to the new regents. But even though people think that I'm a senior with 1.5 years, I feel like I'm still a new
You're a
regent.
senior regent now.
So it's always helped to, that background, repetition is the mother of ability. And I know that our new regent will say so much information, especially if you have that book, that's just one book, right? From one committee. Thank you. Please, NAU have the floor now.
Thank you, Regent Mata, and thank you to the Regents for the opportunity to present NAU's 2022-23 tuition and fees proposal. I am accompanied by our Senior VP and CFO, Bjorn Flugstad, and our VP of Enrollment Management, Annika Olsen. I will just say that at NAU, we are very much in line with the tuition theory and the tuition model that President Crow has presented for ASU. We differ on the design, and we're actually in a redesign mode right now as we seek to broaden participation to our excellent academic programs at NAU. And so what you will see today is really a building block to a broader redesign of our tuition, our pricing, positioning, and our tuition model, and how we go about doing strategic enrollment management that we will be presenting to the board in the months ahead. The context behind what we are proposing for this year is in part influenced by the fact that for the last 3 years there have been no tuition increases at NAU, and that we do have, as Lorenzo stated, a pledge program. So any increases that we do put in place only apply for our incoming students and have obviously ripple effects over time. That is, of course, one of the design elements that we're exploring to change towards the future. But with that, I will just turn it over to Bjorn, who will walk us through some of the elements of our tuition and fee proposal, and then happy to take any questions.
Thank you, Dr. Cruz Rivera. Chair Mata, if we can go to the next slide. So as President Cruz Rivera mentioned, this slide really in a nutshell captures the summary of NAU's tuition and fee proposal. You can see that we have on the left-hand side the rates percentage-wise that we will make adjustments for tuition, on-campus rate adjustment of 3.5%, online rate adjustment of $10 per credit hour, approximately 2%, $100 for the 6-month subscription for personalized learning, establish the international rate, and recalibrate the per credit hour tuition rate for part-time students. And on fees, the simplification of fees, moving to the college fee model, incorporating those fees into financial aid packaging, providing more predictability from semester to semester, year to year, and as Lorenzo had noted, elimination of over 500 course fees at the undergraduate level. Also noting for the enrollment fee for fall 2023, adjusting that as well as eliminating the application fee for Arizona residents for fall 2023. As President Cruz Rivera mentioned, this is all within the context of resources, establishing resources to help maintain our university, as well as address new initiatives that come up within the roadmap process that we are all very much working on here at NAU. So this gives that broad context of the tuition and fee proposal. This next slide moves over to the housing and dining fee proposal. As was mentioned earlier, housing 3% increase, dining 3.9%. We do have for dining a meal plan that are established for 2 years, those rates. That's something that we've had in place for a number of years that will continue going forward. And as was noted, a lot of these adjustments are in relation to cost increases, whether it's food or construction, but it certainly does not take into account the full increase. Inflation. Inflation is certainly something that we're all seeing. You see a number of examples that are noted on the right-hand side of this slide. Utility expenses, fuel costs, even vehicles that we are seeing, for our fleet, anywhere from 10 to 40% increases from year to year. Construction costs and supplies, 15% increases from year to year. You can see the slides and the slide on the bottom left, very similar to what Lorenzo had shown, just related to the tuition and fee adjustments in relation to CPI, with that spike in CPI going up very significantly here to up over 7% with the most recent data. And our increases over the past few years have certainly been below inflation, but you can see what that trend has been. We were asked to provide some information for salaries. And what you can see here is salary investments that we've made. For instance, at NAU, we made salary investments and increases last spring of $11 million. Those merit adjustments for faculty and staff were in the 3% range. We've done investments this year, continued to do investments of $1 million. And for future, for illustrative purposes, if we were to go and make investments, we would be looking at a $4 to $7 million investment if we did 3% for faculty and staff. And if we were to match, even though we're not required, but if we were to match the Flagstaff city minimum wage for students, that would be a $4 million investment. So those are just for illustration, what recurring costs we would have if we were to make those decisions for faculty and staff. As was noted earlier by Morgan, NAU is also in the process of spending HERF federal stimulus dollars, the remaining award dollars for that. You can see the awarded amounts for NAU between student and institution were approximately $130 million. You can see that the institution also made the decision to dedicate a portion of those dollars from the institution to students. So the student aid portion from NAU was a little over $67 million. And related to the institutional investments and awards, we certainly had technology investments that we dedicated, as was mentioned by Morgan and President Crow too, to help become more efficient. And speaking of efficiencies and resources, this is something that NAU, as well as all three institutions, need to report to the board in the annual cost containment report, strategies that have been taken over the past year to handle and become more efficient, contain costs. And they start from the very biggest staffing expenditure. That's our biggest expenditure category at NAU, We have a coordinated review process of HR, academic affairs and budget to review all vacancies. And we certainly do operate very leanly at the bottom of our peer group. And we have not increased our staffing per 100 students over the past several years. And you can see the number of examples, whether it's managing our benefit costs through the annual negotiation, being very strategic in purchasing with centralized purchases for IT to basically take into account purchase discounts, as well as managing our space, taking advantage of debt refinancing over the past couple of years when we have the opportunity. And the very last bullet is very important going forward, diversifying our revenue streams so that we do have more revenue than just the state investment or tuition and fees, and not necessarily having to have all of our resources come from those two areas. And that'll be a very big and very prominent feature within the strategic roadmap that we are working on. So those are the slides that we had. I will stop and see if there's questions.
Thank you. Any questions from the regent? Okay, Regent Reiner, yeah.
Thank you, Chair Amanda. I don't know how I'm going to begin this other to say, I know that you're in the process of a review, but your pledge program, in my opinion, simply isn't sustainable in the long run. And I'm not so sure that the pledge program has resulted or had the results that you would have liked, which is more students. So as you have a declining enrollment, you have the WUI students that are only 1.5 times your tuition. You have a tremendous possibility that inflation and costs are going to go up. If you can't revise your tuition every year so that you can revise it the next year, I mean, you are not making any headway, even at this percentage, on your costs or expenses. So I'm certainly going to support this proposal, but you know, I would hope, even though I'm not going to be here next year, that you're going to come back and have a tuition proposal that eliminates the pledge program or imposes some other type of program so that you can look at your income that's going to be generated. So I don't know. That is not a question, I guess. It's more of a comment. And I worry about anyone that has a pledge program, but especially NAU in the position that it's at.
Thank you. Regent Manson, you have, yeah.
I just wanted to give you all the opportunity to kind of talk about how this particular year flows or meshes with the access mission. So how do you and I'm not suggesting I'm opposed to it. I think these are very, very difficult times. The fact that, you know, you have addressed 50% of your expenses, which is labor, in terms of recent increases and potential increases, is important to me. But I think I want to understand from your all perspective how increasing tuition meshes with the increased access. And is this a one-year blip where we're looking at decreased enrollment projections because of that? Are they separate from that? And how does this play forward year 2 to year 3, as far as we can, you know, crystal ball it?
Thank you, Chair Manson. And I will ask my colleagues to also chime in, but I will say from the perspective of the access mission, we want to ensure that it's access to excellence. And so this particular tuition proposal that we're presenting today is a step in getting us in the right direction after 3 years of zero tuition increases to ensure that future incoming classes are not either subject to a lower quality of an education because we do not have the resources for that, or to spikes in the cost that they have to pay because previous classes were not contributing to the same level towards their education. So that's sort of at the macro level, ensuring excellence. From the perspective of the pledge program, we do plan to make changes to that. And it's part of the information we'll be presenting to the board in the next few months. And so it is important for us to be able to put this tuition and fee proposal in place this year, because it's going to ride out for another 4 years as our pipeline of current students that we will honor the pledge to moves through the system. In terms of how we sort of the dissonance between access and increasing tuition, right? In addition to the argument around excellence, we are also looking at reformulating our financial aid policies and practices to ensure that we are being more mindful of how the balance between merit aid and need-based aid, given our broadening participation mission, plays out at NAU. And that's also part of the design that we'll be presenting to the board in months to come. And right now, the challenge that we have with respect to enrollment, which we hope that as we put this new design in place will start increasing again, is in part due to our continuing students. So we had some very large classes a few years ago who have graduated out, and so our pipeline is slower than it has been for a few years. Nevertheless, there's strong demand for new incoming students. So we're rebuilding that pipeline, and so enrollment we expect will increase. I'll see if Annika or Bjorn have other.
Well, I'll have one add to what Dr. Cruz Rivera just mentioned, that Arizona resident admits and deposits right now are at an all-time high, point to point. So to your point, Regent Manson, we are looking to rebuild that pipeline after having a couple years that we had declines. And then, as President Cruz Rivera mentioned, those are working their way through the pipeline in terms of class levels here at NAU.
Thank you.
Thank you. Any other regions? Regent Duval?
Yes, thank you, Madam Chair. Bjorn and Mr. President, I want to ask you about the key word in your phrase, if we do a salary increase and if we do minimum wage. What will be the trigger? When will it occur?
I'll take a first stab at that, and we will do an increase. Right now, what we're trying to explore is what that will look like. It is for the next fiscal year, we will likely in the fall be through a newly established University Budget Advisory Board with faculty, staff, and students, be determining what the right range will be for the following spring. And we're looking at ways in which we can fill that gap between now and then to make sure that we can retain our faculty and staff in Flagstaff. So there will likely be a one-time allocation for funding that will get us through the fall decision of what the increase will be in the spring.
And I would also, as even when we were driving down, talking through what those options are, and I think we will make some, announcements probably, by, early May.
And on the minimum wage side as well?
On the minimum wage side.
Okay. I mean, we just need to be cognizant, of course, that families and faculty are bearing the full brunt of inflation too. So, thank you.
Yes.
Absolutely.
Yeah. Regent Penley and then Regent Herbal.
Thank you very much, Chair Mata. I think all of us on the board, whether we support it or not, understand the Arizona model of funding higher education in our state. And that model, unfortunately, relies on limited or very modest state support relative to most states across the country, and substantial burden upon students through the price of tuition. And as President Crow noted earlier, even as we have to charge the level of tuition we do to resident students, we know that that does not fund the costs of their education. We have to fund their costs through other means and through other students. So this particular approach, though, while it challenges all three universities, is especially difficult for a university like Northern Arizona University which sits in a smaller community with less opportunity to really generate the other resources that Arizona State can generate or the University of Arizona can generate. I'm not suggesting that either of those two universities have an easy task. They do not, but yours is even more difficult. You have indicated that the proposal that you have made today is a building block toward a transformed tuition system. And I would appreciate your foreshadowing that and elaborating on where you're headed.
Thank you very much, Regent Penley. So ways in which we can surmount the challenges that you have presented are similar to the approaches that, for example, ASU has talked about previously. So growth is clearly one of the aspects of that strategy, not growth in Flagstaff, but growth as we work towards broadening participation of Arizonans in higher ed throughout the state. So that's one component of it. Another, of course, is the mix of our student body, with more international and out-of-state students being part of the equation. And I will say that we have a lot of work to do also on just retaining the students that we accept. And that's another way in which we will be more efficient and effective moving the work forward. In terms of how we're looking at our financial aid practices and our tuition model moving forward, there will be a shift in the way that we message our value proposition to students and families, as we've spoken before in the past, in terms of not only the admissions requirements, but also in what they can expect from the perspective of financial support. And so that will be an important component of our managing these challenges. And I think there's still a lot of work that needs to be done with in collaboration with the board to see if we can move those state investments in a different direction. We do know that right now at NAU, I believe the per student contribution from the state is around $4,400 a year. And I find it interesting that is below the approximately, I believe, $7,000 a year that's awarded for K-12 students. And so as the economy is increasingly requiring more college graduates to continue to grow and be effective, approximately 7 out of 10, every 10 new jobs, high-paying jobs coming to the state require a college degree. I would make the argument that it would be to the benefit of all Arizonans if the level of investment in NAU students was similar to the level of investments in third graders. And so advocacy will also be an important part of our work forward as we evolve our value proposition for the state and what it means for not only the individuals that are getting access to this education, but also for the communities they represent.
Thank you.
Regent, thank you. Regent Herborn? Yeah.
You talked about the applications being up so significantly. Do you have any clues from those numbers as to what the interest is on the part of students? Are there particular areas that stand out that look like they're appealing to students?
Applications and current accepts for Arizona residents are up, particularly on the Flagstaff campus. There's no one particular area of study that is outpacing others. We have seen in the last couple years an increase in undecided students, exploratory students. So coming to campus and working with advising and other resources on campus to design their educational experience. We have dug into that data quite a bit over the last couple years, and students do settle into a major pretty typically in the first semester, if not a little longer. For students, there is not one area that is outshining or outpacing the other. It's incremental in many different areas. We've seen an increase in particular in this year from the last 2 years in our Franke College of Business. There's some maybe a little outpaced increases there, but no one area in particular.
Thank you.
Thank you. Regent Shupman?
Thank you, Chair Mata. President Cruz Rivera, I appreciate the thought process that you're going through, and I appreciate particularly the fact that you see and recognize the need for this board and you to have a conversation with our legislature and our governor. I believe that NAU is uniquely positioned for this access mission because it's going to serve rural Arizona, parts of Arizona that are really hard to reach. While we get those students at all three universities, you're trying to set up an invitation to those students in particular. So the strategy could be built around this idea that NAU is investing in the entire state, not just the metropolitan areas. And I think we could build a proposal for additional funding around the fact that, for instance, Flagstaff and Coconino County, you are the largest financial organization of any sort within the entire county. So you're not surrounded by large corporations, you're it. And so those communities need this, are desperate for this sort of support. And that may be one of the ways we can approach it, but I think it's incumbent upon this board to work in particular for funding for all three. But this is one particular area that I think the state needs to recognize that they have a real role in helping to ensure that every student in Arizona has the opportunity. Thank you.
Thank you so much.
I also want to support all of the charter and their new roadmap that you have been working. I believe it's 5 objectives or 6, if you correct me. Yeah, 7. I'm so sorry. 7 objectives, which, is what you are saying about the building the block for access and rural Arizona, which is completely different, access when you think about what you're doing, especially being the newest president of the 3 university. So, and like Regent Schutman mentioned, yeah, we need to work very hard with our legislation and making sure that, that they see the roadmap of the 7 objectives that you are giving to the communities. And it's not just in Flagstaff, but it's also elsewhere. So this is my comment, and I think that it's going to be tough, but it's a durable, to continue, because we are expecting, changes, from NAU, and we have to believe and have the faith that things are going to evolve. I know Regent Candur is looking at me because she's an NAU student too. So if there's any other question by any regent, we can move forward to the next one, unless you still have any other comments or presentation to
No, we
continue.
very much appreciate the comments and the feedback, and look forward to the work.
Thank you. Our next presentation will be from President Robbins and Lisa Rolney. Please provide your remarks for U of A.
Morning, Regent Mata, boards of regents, guests. I apologize, I can't be there with you. I'm here in San Antonio, hoping that we continue to stay in San Antonio through the weekend.
And we have Provost Folks.
Regent Mata, can you hear me?
President Robbins, I can no longer see you because I can see the slides. Hopefully you're there.
I'm here, but I can see you and I can see myself, but I don't know if you can hear me.
Is your microphone on mute, President Robbins?
It's not.
I just got a note that the sound is coming through on Zoom.
You got like 8 people over there trying to figure it out.
Where were the other 2?
All over there punching buttons.
Technology enabled.
Well, maybe while we try to figure that out, Chair Mata, I just would like to say that before we get rolling, this process is guided by President Robbins, and it's a partnership between academic affairs and business affairs. And I really would like to thank the team that participates in this. Garth Perry, our Chief Budget Officer, I believe is in the Zoom room. Casey Urquidez and her team in Vice President in Enrollment Management provide critical information and guidance. helped get us here today.
Yes, thank you.
Regent Mata, can you hear me yet?
Yes, we can hear you, yay.
Okay. All right, so
See you, but we can hear you.
you can't see me?
Nope,
The slides are
nope,
slides.
we're just looking at the slide, that's fine.
Okay, all right, well, I'm here. Well, I'll turn this over pretty quickly
Okay,
to.
now we can see you.
Okay,
We've got you
great.
now.
We got you,
President
yeah.
All right, so I'll start over. I apologize for not being there or being in proper attire. I'm here in San Antonio hoping to stay through the weekend, but we'll take it one game at a time. So today, I'm very appreciative that Provost Foltz and Senior Vice President Rolney are there and will handle most of the commentary on our proposal. I think I'll just say at the outset, this comes in on the heels of 2 years of essentially no increases in tuition. There were some small increases in medical school tuition. For the most part, we've not raised tuition for the last 2 years. And I foreshadowed last year that we would be coming back with a proposal that you've seen and others in the public certainly will see today. But I would just say at the outset, everything we do is based on the strategic plan that we developed several years ago, which I think continues to provide a bold, distinctive, and differentiated vision for our future success. And we've continued to implement on the strategic plan, even over the last 2 years during this pandemic, while helping to meet Arizona's public health needs during this difficult time. As we design the plan, it calls for nuanced decisions and investments around different domains. These investments allow the university to tackle society's largest challenges and prepare graduates to pursue their hopes and dreams while carrying forward the spirit of inspirational human endeavor. I don't know who's controlling the slides, but can we have the next slide, please? Great. The next one. So recent highlights. I think in the interest of time, I'm going to skip these. I have a lot to say. There's just incredible things to talk about in terms of all the things that are going on. And I continue, even 5 years into this journey, continue to be amazed by the incredible things that go on at the University of Arizona. You can see Dr. Carletta Chief in the upper left, who is heading up our Indigenous Environmental Institute, and all the way down to the bottom right to the athletic programs. But I won't spend a lot of time because we're here to talk about tuition, and I think that it's probably better to go ahead to the next slide. And just to highlight, and I'll turn it over to Provost Foltz on the next slide. But this, I think it's important to understand that, again, every time we talk about increases, 99% of our undergrads will see no increase. And that's a good news, bad news story that has just been discussed with NAU. Our tuition guarantee program, I know Casey's on the line here. This is something I've had long discussions since I've been here about the wisdom of this program. We're going to continue it because we think it's an advantage to us. But I just wanted to highlight that most of our students will not see an increase in tuition. And before, I think we can go to the next slide, but before Provost Foltz begins to speak on this next slide, I just want to go back to that question that Regent Herbold asked President Crow. And I always join the chorus of saying, I think President Crow and his team has done an incredible job at ASU in terms of building out the research infrastructure, and online, and certainly the international programs. we seek to do the same thing, but I just want to put a finer point on the research infrastructure. We do not get any money from the state to support our research infrastructure. So just bear with me for 1 second. If you get let's say $1 million award from the National Institutes of Health, that $1 million supports the work on whatever it is, stem cell biology or hypertension through the renin-angiotensin system. And then there's an overhead rate assigned to that. And let's make it easy to say it's 50%. That means you get an extra $500,000 that goes to Lisa and Dr. Cantwell to provide all the overhead associated with the direct research that a particular investigator would do. Every time, as President Crow said, for every dollar we get, it costs us money. We have to come up with money from somewhere else to subsidize the research mission. And so I think it's really important to keep that in the proper context and to explore whether together we need to focus the legislature on that work, because in addition to discovering new knowledge and translating that new knowledge into commercializable products that will help society, it also creates jobs in our communities, from the work we're doing on our space missions to the health sciences work to engineering and on and on. So I wanted to get my plug in about research infrastructure and how we really need support for it and how important TRIF is to each one of our universities. With that, I'll turn it over to Provost Foltz. Thank you, Liesl.
Thank you, President Robbins. So I think we can say unambiguously that our strategic plan is working, and we're starting to see real outcomes from the investments we made in alignment with the strategic plan, which was introduced in 2018. We're bringing in more academically prepared and more diverse classes year after year, with tremendous impacts on the university writ large. This year, we're proposing a 2% increase for residents, for incoming resident students and tuition, and 5.6% increase for non-residents. Needless to say, the proposed increase for non-residents is based primarily on what the market moves have been among peer institutions. And we're pretty confident that the market will bear that. And the 2% increase for residents is as low as we feel that we can manage while keeping inflationary pressures under some control. These proposed increases will allow us to continue to provide our low to mid-income students with support to allow them to come to the University of Arizona. We anticipate that with this proposal, we'll push out about another $24 million in institutional funding, institutional financial aid, with a relatively consistent total discounting rate overall. Next slide, please. Thank you. On the graduate side of the shop, we plan a 2% increase for residents and 0% increase for non-residents. Again, on the resident side, we're trying to keep that as low as possible, but trying to deal with inflationary pressures. For the non-residents, again, that is being driven by market pressures and what we believe where we need to be positioned among peer institutions. Next slide, please. Bobby, I'm going to hand this one back to you because this is in your wheelhouse.
Okay, so this is for our College of Medicine students. There'll be a 4.3% increase for resident students, and that would apply to all years of medical school. So we don't have like we do for undergrads, a tuition guarantee program. So each year, we change the rate for our students, so it'll affect all of our students, and a 1% increase for non-resident students. Certainly, medical education is a resource-intensive program, and as such, the tuition tends to be higher than for other doctoral programs. And we need to keep up with our ABOR peers and to retain competitive nationally applicants to our medical school. And we believe that this tuition increase will, because we get so many applications, on the order of 10,000 applications a year to our medical schools. We work to minimize the unanticipated increases in tuition to our medical students while still providing necessary resources for students to achieve their academic goals in their career. I would just say parenthetically, there have been, I think, almost 90 students who've taken advantage of the funding that the legislature generously provided to us, that if they commit to serving in the state for year after their completion of their training, then we would have physicians coming back to the state to serve for at a minimum of 4 years if they go all 4 years and take advantage of the program, and they go tuition free. I think this is a tremendous program, and I'm so happy that our students have the advantage of, have the opportunity to take advantage of these programs. Moreover, once you establish a practice in an area, you're more likely to stay there long-term. And these are in areas, there are 6 different specialties that are primary care focused and will be in underserved communities. So I think that's a tremendous program that we got specific help from the legislature with. So the next slide, please.
So for our new College of Veterinary Medicine, we plan a 3% increase for all students, resident and non-resident, again, considering market factors, but also strong inflationary pressures. In this case, we are experiencing higher inflationary issues because the market for veterinary, for vets, for DVMs, has tightened considerably in the last 2 years. It's been written up actually in the press a good amount that there's now an incredibly high demand for vets, both in rural and urban areas. That then impacts us when we need to go out and hire talent to serve as faculty in our program. Just as a reminder, this is a professional degree program, and it requires very significant investments also in instructional resources to meet the standards necessary for accreditation. Right now, we've received 1 appropriation from the state to invest in the renovation of 1 building to support vet med. But other than that, the college is fully dependent on tuition revenue and development funds at this point. We do believe this increase is relatively modest compared with the pressures in this field, but it will allow us to keep moving forward with building out that program. For our online degree programs, we're again being driven here primarily by market rates. Oh, next slide, please. I'm sorry. Used to being able to click my own slides. And for that reason, we're proposing a 0% increase for Arizona Online and for our distance program for undergraduates. On the other hand, we see that we could push tuition a little bit for the graduate programs in the distance realm, and we're proposing a 9% increase there. Let me say, though, that the tuition for these programs is established on a program-by-program basis. And obviously, there are higher tuition rates for programs that both cost more to deliver, but also offer students that complete those degrees higher remuneration once they've completed those accreditations. Next slide, please. Global microcampuses continue to expand. We have 11 active microcampuses today with about 1,500 students in them. We're growing to 4,800 students by FY25. We have new programs or new partnerships under development in a range of countries, some of which are listed here. Actually, I notice India's missing from that list. India is a core focus as well. We have graduate programs starting to come online on our micro campuses as well. And interestingly, we've entered into a relationship with my alma mater to do a dual degree program in medicine that will be set up like a micro campus. And that, of course, has quite different tuition rates. One correction I noticed that didn't make it onto this set of slides there. The amounts that are given there are per academic year, not per semester, as is shown there. That was an error, I apologize. Next slide, please. Over to you, Lisa.
So we've talked a lot about cost increases today, and we are not immune in Tucson. We think about inflation, obviously. We have an incredibly competitive labor market in Tucson. Regent Mata and I have had conversations about our inability to staff all of our dining services. We offer 34 dining services on campus, and 6 of them remain closed because we simply cannot find the humans that we need to manage those services. We're also tracking increases in utility costs, in construction cost escalations, just as ASU and NAU. And something that we're really looking at is the cost of living increases. Over the last 12 months, cost of living has increased 6.5% in the western region of the United States and 7.1% here in Phoenix. So given that our costs continue to rise, along with demand from our students for additional and more robust services, this year we're proposing an increase to our health and rec fee to support market-based salaries for our health professionals, and an increase to our student services fee to support healthy food options and to continue to fight food insecurity through the services that are provided by our student union, as well as the rising costs associated with minimum wage. In Tucson, we have a path to $15 as the minimum wage that's been laid out by the city of Tucson. While we know that we are not bound by that, in order to actually hire people to work in our minimum wage positions, we know that we actually have to move faster than the plan set out for city of Tucson. So that puts increasing pressures on auxiliaries, and unlike our peers, we run our auxiliaries in-house. So this student services fee allows families to have a one-stop shop where they can see the broad array of services that are being provided to our students. And due to our guarantee, these fees will be phased in over 4 years, with each progressive freshman class stacking until the fee is fully integrated. For housing, we have small increases proposed this year that certainly don't track what we're seeing in the market. Our undergraduate rates did not increase for housing last year. Our graduate rates have not increased for the last 3 years. The rate increase this year is, again, due to those rising costs, especially the minimum wage, utility cost increases. And then for housing, we have a need to make continued investments to reduce the deferred maintenance that we have in our aging facilities. For meal plans at the University of Arizona, I would like to remind you that we basically own kind of unicorn status in that we are one of 2 institutions that we know of in the United States that does not have a mandatory residential meal plan, nor a fee that supports our dining services. So we do have a residential meal plan in our Honors Village, and we are not proposing a change in our fee structure this year. What we're proposing is simply an expansion of the already approved Honors Village plan to all residential first-year students. This change will not be effective until fall of 2023, and it will be accompanied by a waiver and a scholarship program to support students who have financial needs and those with dietary requirements. And a combination of the increase in the, I'm sorry, Regent Manson, did I see your hand? Very quickly, I want to make clear that I understand that you're now going to have a mandatory freshman meal plan.
Yes, that's
Okay.
correct.
Just wanted to make sure
all residential for incoming first-year students beginning in fall of 2023. Yes, so the combination of the increase in the student services fee and the expansion of the residential meal plan will directly support requests from our students for dining remodels, nutritional improvements, long-term sustainability of our student union and dining services, and then
expanded efforts again to fight food security on campus. Next slide, please. All right. Oh, I feel like we've kind of talked enough about costs that continue to increase, but we know that we have to make investments in our students, our faculty, staff, and our infrastructure in order to achieve the goals that President Robbins laid out at the beginning of our presentation. So I won't go through all of the uses that we anticipate on this slide, but I do want to highlight a few. The $1.9 million in debt service that you see, that represents approximately $130 million in planned capital renovations, which we'll talk about in our upcoming capital planning process. The $4 million in operations and maintenance represents anticipated $1.5 million in utility cost increases, as well as $2.5 million associated with the leases that this board approved for our DC Center and the refinery building. $3 million in enrollment growth reflects the increased student access, retention, and completion efforts, and the increased impacts on our Arizona's workforce. And then we've been talking a lot about salary increases, and we know that our greatest asset are our employees, and that we must make an investment. And typically in our all funds multi-year planning process, we ask our units to set aside 2% of their personnel expenditures for an annual salary increase plan. We recognize that given the competition on our market and inflation, that is not enough. So we've asked them to double that and set aside 4%. And our salary increase program will have components that recognize inflation as well as merit. And it will be implemented on July 1st. So I'll stop there and ask if you have any questions for any of the three of us.
Thank you, Lisa. Thank you, Provost Folks. Any question by any regent? Chair Manson? I'm sorry, Regent Dave,
Thank you.
and
Chair
then
Mata.
Regent Manson. Yeah.
Just one quick question on the meal plans. What % of students right now currently, so freshmen, incoming resident students, go without a meal plan?
Go without a meal plan. We have about, that's a really good question. I have to get back to you on the exact amount. Right now, it only applies, the residential meal plan is only mandatory for the students who are in our honors village, so it's about 1,000. But all students have the option to select a meal plan.
Okay. Yeah, just curious how many choose
Sure.
not to.
Happy to.
Thank you.
Any, Regent Shipman?
Just very quickly, you have 6 dining facilities closed right now. Do you have a plan that will have those open when you go mandatory? Because it seems like the capacity to feed them all will be another element of this decision.
Right. A good, very good question. We actually plan to change some of the nature of our dining facilities. There's been more requests for traditional dining hall types, and these, both the student services fee and the expansion of the residential meal plans will allow us to make the changes that students have asked for. One of those, not only is to have more traditional dining hall, but to have subsidized grocery store on campus, as well as more options for healthy food.
Thank you.
Thank you. Chair Manson?
Thank you. I have 2 very quick questions and then one a little more detailed. The first is, the fees are under the pledge. Is that what you're talking about in terms of the rolling in? So if there were fee increases next year, they would be in the same situation, they would roll in over 4 years. That's correct. Okay. Can you give us a little update on application status at this point relative to last year?
You're very strong.
Yeah, okay.
Yeah, everything's green.
Yeah, we receive I don't know if Casey or Ketis is on the Zoom call, but we receive an update from her team on a weekly basis. And what Provost Wilkes is referring to is that all signals are good.
Yes.
All the metrics that we're tracking, whether that's applications, enrollment fees, housing signups, orientation fees, everything is positive. So is it up from last year, which we know was pandemic impacted? Is it back to normal levels from 2 or 3 years ago? Is it beyond that?
We're well beyond that.
Okay.
We actually exceeded expectations for enrollment last year.
Right.
Which was something of a surprise in the middle of the pandemic. I think the particular bright spot spots now are that we're starting to see international travel open up again, and our international students are starting to come back as well, which will, of course, benefit the campus community enormously and enrich the cultural experience on campus. So we're very, very excited to see that build back.
Thank you. And then the final question I had was regarding the medical school program in Australia. So when you went through the slide, you said that the fees that were presented there were per academic year, not per
Not per
term.
term, correct.
So was the 37, what is it, 37.5 for the academic year for? Because the tuition that we were given for COMP and Tucson was per semester as well, and those kind of correlated.
So because that's a partnership program, half of the instruction will be done. In fact, Professor Robbins should speak to this probably more than I should. But the half of the instruction will be done in Australia under their fee structure. So the fee structure is quite different then, because the program is very different. But President Robbins, do you want to talk specifically to the structure of that as it's been evolving?
No, I think you have it right, Provost folks. And I think Regent Manson, I couldn't see the slides as well, but the numbers that I think we presented for both Phoenix and Tucson were for the year.
They should have been for the year.
Yeah.
For the year. So it's a little less, the 35,000 is a little less than for the Arizona medical schools, but that's one of the advantages of doing this program, that the tuition in Western Australia and the most, to be clear about it, the most expensive years of medical instruction are the first and second year. And so they're able to get that instruction in the basic sciences and histology, pathology, all those things at Western Australia, and then come to Arizona to do their clinical rotations. So that's how that number ends up being a little bit less than what we can offer here in the States.
So just those numbers are presented in our materials as per semester numbers. So we will get those clarified between now and the
Thank
board
you.
meeting and make sure that's all clear.
Thank you. And then the accreditation of that program, that all falls under U of A's medical school accreditation?
Yeah, it'll be both. It's a little tricky. So that's why it's taken a little bit longer. But there are precedents that the U.S. Accrediting body will allow these type of programs. There's one that I think it's Ochsner in New Orleans has with Queensland, Australia, for instance. And so it took a little time to work that through to have sort of basic science in Australia and clinical rotations here, but we're well on our way to getting that resolved. But it would be both accredited in Australia and the US.
Okay, thank you.
Any other question? Well, thank you so much, President Robbins, Lisa, and Lissel. Sometimes it's hard to call you provost folks, but yes. So used to, to be a Tucsonian, see each other even at the Dillard store, right?
That's very true.
Yeah. So I, first of all, and before we conclude this item, I want to thank each of the President Crow, President Cruz Rivera, President Robbins, and all the leadership and staff that work very hard to put this data together, but also our ABOR team that have to compile the 3 universities. This was an amazing, work behind the scene. I always call it the moment of truth, because we don't see that moment of truth until, you go and say, what is going on here, right? So I thank you for all the effort, and this is only a discussion item. So a tuition hearing will be held, Regent Duval, do you want to say something?
I did. I didn't want to interrupt you, but I also didn't want you to adjourn. So I'll take advantage.
Yeah, I know.
Now I've done so.
Yeah.
It's a question for John, and it just goes to what feels like an artifact, and I'm just sort of curious. So I remember 2008 when we created the region set aside. It was really the first step of moving towards, as President Crow said, the high financial aid, medium price tuition model. And the first step was this notion that we're just going to simply force a dollar amount into financial aid. Does it serve any lingering purpose, or is it just an artifact of an old model? And I'm curious just whether or not it's sort of outdated.
That was a leading question.
Yeah, looking at me. Chair Mata, Regent Duval, great question. We clearly spend well in excess of the region set aside on.
At the time, it was a bold move, but now it's.
Yeah, there are some internal workings in the universities in terms of how cash is generated to provide tuition fees. And the region set aside works a little bit differently than their other institutional aid. And so, we have a financial aid task force. It's part of the at-risk assignments for the presidents. I think that would be a great question to put to that expert group to see how disruptive it would be to do away with it. I think they do rely on that set aside for a very specific use, and having it, Annika's nodding vigorously behind me, so having it just disappear, I think would disrupt the way financial aid is currently structured. Did I do okay?
Chair Mata?
Yeah, Regent Penley.
Thank you. John, I'd certainly I agree with Regent Duval. I've questioned this for some time. I've said to myself, we should either eliminate it or raise it substantially.
Yeah.
Because in fact, the universities are providing substantially larger financial aid. And this really understates, if people were to look at this, the public, it very much understates the financial aid commitment that we have from all three universities. So I've found it kind of, I don't know, I've thought it either distorts what we do and miscommunicates in so many ways. So I'd certainly appreciate and join Regent Duval in saying, let's look at this, and perhaps a revision of policy is way overdue.
Several members of the task force are sitting in the room today. So I think they've heard that, and we can certainly add that to the charge.
Okay, thank you. Regent Shipman?
Just a quick follow on, and as a new regent a long time ago now, I was stunned by the effort being made of our universities to actually deliver education to Arizona students at a loss for every single student. And I don't think the average Arizonan understands and appreciates what we go through to make that happen. This is another opportunity for clarity of communication and value for our three universities. If we can put this into the right context and demonstrate what these three universities have done with our help to get to this point and clarify it and make it simpler, that helps us make our case for greater state support, and at least, if nothing else, greater appreciation from the people of Arizona for how much work we go to and what lengths we go to ensure there's access.
Thank you. Any other, Regent, before I continue? Okay. A tuition hearing will be held Monday, March 28th afternoon, 3 to 5 p.m. to allow for public comments on these proposals, and we look forward to receiving those comments. In addition, regents have been receiving email comments submitted through dedicated email addresses and comments submitted through the regent's website. This is an information item, so no action is required. This proposal will be voted on at the board meeting on April 6th through 8th. And I would, I don't know if we can have a break or continue if the majority say, let's continue because we still have multiple items. We normally will have a break and yeah, Regent Schutman is saying yes. We'll take a 10-minute break. My laptop say 11:05, which is the defense contract.
11:01.
Yeah, she say 11:01. So 11:10, we'll be back.
Perfect.
Thank you.
6
Sorry.
minutes and not a minute more.
I know. We just have so much, yeah, we have a lot.
Thank you.
Item number 3. We have item number 3 to 5 that will allow for discussion of each university's annual sunset fee review. This will be the second year that the committee has discussed this item pursuant to the board's new policy that requires the board to review each academic fee at least once every 10 years. We will start with ASU with Provost Nancy Gonzalez, and she will present item number 3. The floor is yours.
Thank you. Good morning, everybody. So this should be short. There were
We can hear you.
Okay. Better? Okay. There were 6 ASU fees on the schedule to be reviewed as part of the calendar year 2021 sunset review. Each of the responsible academic or administrative units submitted a report that reviewed the purpose, enrollment, and fee revenue associated with each of these 6 fees. As well, each unit was asked to recommend whether the fee should be continued as approved, changed, or disestablished. We do have a slide for this. 5 would continue as approved, and those include mandatory fees primarily related to student services ranging from student recreation center fees, health and wellness, student athletic fees, a fee for Graduate and Professional Students Association, and other student services. Pending ABOR approval of the Digital Emerging Graduate Student Support Fee, one of the fees reviewed will be eliminated. And that was a fee for that graduate students were being charged for online access to online undergraduate courses. That will be captured in the other fee that we've now proposed. This is a minimal number of courses on our list because most of our other class fees were decreased or eliminated previously as part of our effort to streamline our tuition and fee structure.
Thank you. Do we have any question from any regent? Here none. So this is an information item, so no action is required. This proposal, along with the following, will be voted on the April board meeting in a few weeks. And we have now the sunset review of fees from NAU. Bjorn, the floor is yours.
Thank you, Chair Mata. As noted earlier, NAU is moving to a college fee model for this upcoming year. However, we had gone through the process to review 151 fees. Those would have remained unchanged, but in going forward, we will be eliminating those in conjunction with going to the college fee model. That is the short summary, and I'll stand for any questions.
Thank you, Bjorn. Any question from regents? So here none. So this is an information item again, and our next sunset review of fees is U of A. Liesl.
Thank you very much, Regent Mata. I will just remind everybody that we paused our sunset review last year because of the pandemic and many other things going on. We picked it up again this year. We do it on a college by college basis. This year we reviewed the College of Fine Arts, which has rather a large number of fees, so it was actually quite a busy process. 235 fees were reviewed. The reason that the College of Fine Arts, of course, has many fees is because of the very large number of studio-based classes where there are consumable materials and so on. Of those, one fee was completely eliminated, which was to do with a class actually no longer existing. One fee was adjusted in that it was extended to an additional number of years for that class within the program, and 233 of those fees were unchanged and felt to be still appropriate to their original purpose and mission. I'm happy to take questions on that, on any part of it, really.
Thank you, Provost Folks. Any question from the Regents? Okay, so there's no questions, and these 3 items are informational only, and this proposal will be voted on at the April board. We move to the next item, number 6, which is the first reading of capital policy revisions, and the board office asked the committee to review for consideration on first reading the proposed revisions to board policies in chapters 3 and 7 related to the capital process. So Lorenzo Martinez and Lita McCullin from A-Board will present this item. Lorenzo, the floor is yours.
Thank you, Chair Mata. I think we'll be able to make up some time here. Just quickly, over the years, we've received feedback on our capital development process and the way capital items flow through the committee and the board. And we have 2 major capital plans that are typically reviewed, and the way the timing worked and the way things were presented, that it had a tendency to create a lot of confusion. So we put together a work group to look at our policies and our process. We reviewed our policies, and what this slide just shows is we did a lot of cleanup. We tried to streamline the policies so they align better with a more clear process. And we sort of made some name changes and added a step in the process that would have capital projects come for a final review to the board. The 2 things I'll point out here are the last 3 items here. We had board policy that capped any public art on construction projects to 0.5% of the project costs. The proposal would eliminate this cap. The templates that are submitted for individual projects have a line item that shows how much, if any, allocation is made for public art, and so we would continue to see that, but wanted to highlight that for the committee. Also, next to last bullet there, we have language that speaks to plaques for new buildings and who should be listed on the plaque. I'm gonna look at Jenny to see if she remembers what year the plaque. 1950. We dug up the minutes. The board at the time was speaking about a project, and there was discussion on whether there should be a plaque and who should be on it. Subsequent to that, there was policy put together that said if there's, plaque should include the regents, the governor, the architect, the contractor. But recently, as the work group was reviewing this, the question came up, are plaques required or are they optional? So now we're just clarifying that it's optional. Then finally, as a result of a recent audit from the State Auditor General, we are adding in board policy that any waivers to any policy should be in the best interest of the university and applicable state laws. So with that said, this chart just sort of compares the major steps in our capital development plan, current process versus the proposed master plans. I'm going to go through each of these, but this flow chart here sort of outlines the process. It starts with a master plan. Each university per policy is required to have a master plan for their campuses and large parcels of land that has a 10-year outlook. So the master plan, as I mentioned, 10 years, there's a boundary that's supposed to be defined. And each university has one. All three of them are working on updating that. So in the next year or two, these are typically about a year to 2-year process to develop this. As I mentioned, all three universities are currently updating their plans. And so the proposed process would have them continue these 10-year plans. Any revisions would require board approval. We continue the large parcel requirements. But the next to last bullet here that we want to highlight is universities would have authority to purchase property within those established boundaries, provided that the purchase price is within 10% of required appraisals. And any purchases would be required to be reported to the ABOR office. Yep, question.
Oh, I'm sorry, yeah.
So just a quick question on that particular item. Do we know, my only concern is, are we permitting multi-million-dollar land purchases within the master plan boundaries without knowing about them ahead of time? And I just don't know whether those even exist, whether within those master plan boundaries, we have multi-acre properties that would be multi-million-dollar purchases.
Good question. This would allow those types of purchases provided they're within that 10%. There's no requirement in the policy as it's written that there be advance notice.
Thank you. Any other question?
And that raises, we are at first reading for this policy, and, at the next cycle of meetings, we'll bring it for second reading for final approval. One thing I would note is, and so there's the opportunity for changes. The other thing I would point out is one of the things we would plan to do when master plans come forward is sort of pay particular attention to those boundaries and identify what is and isn't owned by the university. And at least when these master plans are initially presented, we can identify, potential future acquisitions.
Thank you, Lorenzo.
Okay, so then the next step after master plans, those would be used to help put together what we call the capital improvement plan, the CIP. And this is a 4-year list of projects, but it's forward-looking. So these are required in statute. They're due to the governor and legislature every October, so they come to the board in September. Currently they require 3-year outlook. We would increase it by 1 year. And then a new requirement there for one-stop shopping is to have indication in these plans of whether not just university projects, but whether third-party projects or commercial type projects are being pursued within that time frame. And approval of these 4-year plans would allow the universities to contract for design and planning and construction, contract management, not construction yet. Then the next step on this would be the annual capital plan. And so what happens in the annual capital plan is this would list the projects that the university intends to pursue in the next 12 months. And the expectation is that these projects would have appeared in the prior year's capital improvement plan, that 4-year plan. The big change here is that these annual plans would come before the board in September along with the capital improvement plans. So every September now, the universities are going to present their next year's capital plan and the 4 years after that. And so in September, the board would see a 5-year capital planning and projects for each university. These plans used to come at different times of the year for the board. And so that tended to create a lot of confusion of which plan are we looking at? Is this 12 years? Is this some future years? So approval of this would allow the universities to complete design of these projects. And then finally, the last step and this is an old new step. About a decade ago, once projects design was complete, the projects used to come for the board for a final approval. That got eliminated, but now it's back. So the reason for this is because in September, the Regents see that 5-year outlook, and then throughout the year, they will see individual projects coming forward again from that 1-year plan for final approval. Other changes to the policies, there was a policy on annual debt reporting. We've better defined that, streamlined that. Debt reporting will continue, but again, we've sort of revised that to streamline it. Both for second bullet on 3-501, the issuance of debt, that is in a separate policy for debt reporting in our budget policies. And then the final bullet there is increasing the limit of procurement of job order contracting. This sort of allows the universities to have a list of vendors that they could tap into as needed without having to do a formal procurement. We're increasing the limit from that 1.9 million to 4 million. So in summary, we had 24 separate policies. The proposal would eliminate 4. It would move one of the policies to a different area of board policy, and then the remaining 19 get consolidated into 4. That concludes presentations.
Thank you,
Happy to
Laura.
stand for any questions.
Thank you, Lorenzo. Do we have any questions from the Regents? Regent Henley?
Thank you very much, Chair Mata. I'm just curious from the university's point of view, any comments on what Lorenzo has proposed? How workable is this from the perspective of the universities? What problems does it create? What concerns would you suggest to us?
I'll just make one comment as Morgan comes up for a more specific comment, and that is I appreciate the focus on constant review of the process and the procedures, because there's so many legacy things that were put in place 3 decades ago or 5 decades ago, and this constant review of everything is very, very helpful, particularly as we operate more and more in our enterprise mode. That does mean then that we'll need new review processes and other kinds of review processes, which I appreciate and understand, but they're different than these. So, Morgan.
Yes, Madam Chair, Regent Penley, I think, as Lorenzo probably stated, there's been a working group that involves staff and kind of an interdisciplinary group of people from each of the universities. So these policies tend to touch our facilities operations, our real estate operations, our legal offices, as well as our financial folks. And so I think this is really good that we're doing this, and only first reading, there may be some suggestions that people want to make throughout that. But I think overall, it's a really healthy thing we're doing this. To me, it's a little bit like history, perhaps, unfortunately. All things tend to be cyclical. Some of the regions who've been here a while will remember, that at one point we reduced the number of steps, for an individual capital project to move through the process. And there's always a little bit of a balancing of, making sure that, there's oversight and the board understands, what's happening and is comfortable with it on the one hand. And on the other hand, of course, these projects tend to be critical, to the success of our institutions. And so the ability to move fairly quickly and to be opportunistic, as long as we're also, exercising good stewardship, is really important. And so there's always a little bit of a balancing and trade-off among those things. And that's from my standpoint, the only thing I would, encourage people to think about is ensure that we don't become so bureaucratic that we can't do the right things to, achieve the mission of the university and the stakeholders we serve.
Thank you, Morgan. Any other questions by Regents?
Chair Mata, if I
Yeah.
could raise one thing, as we mentioned, there were a lot of eyes on this policy, and if it was late evening or early this morning, ASU's general counsel noted that we were eliminating some language related to restricted versus unrestricted access to university campuses. We thought it was old language that was no longer needed. The work group thought that, but legal has said they have actually used that a handful of times relative to, the public access on our campuses. And so by the time
We
we
try to
get,
keep the assassins away.
Yes. Well, I remember when I lived in Cambridge, Harvard, one day a year had to lock its gates to restrict public access so they could remain a private university. And I imagine this is similar language to ensuring that these don't become public lands. But that said, by the time we get to second reading, we will restore that language.
Thank you, Lorenzo, for your comments. So any other question or comments by the board? Hear none. So I move to the committee that the committee forward to the full board for approval on first reading the proposed revisions to board policies, Chapter 7, Buildings, Infrastructure, and Land, 3-411, Annual Report on Debt Capacity, 3-501, Issuance of Debt and Financing, and 3-804, Professional Services and Construction Services Procurement, and the repeal of Chapter 7 policies as described in the executive summary. Is there a second?
Second.
Thank you. All in favor?
Aye.
Any opposed? Any abstention? Motion carries. We move to the next item, number 7, is the U of A sublease at the refinery, and is a review of a request to enter into a sublease for space at the refinery building located at the bridges. So we have Lisa Rollner from U of A that will present this, and I'm sorry.
Heather Gaines.
Heather Gaines, Senior
Heather,
Associate
yes.
General Counsel, in the event there are
Thank you.
questions,
I'm
Madam
still
Chair.
working on names.
Thank you, Chair Mata. Could we have the next slide, please? All right, so appreciate the opportunity to talk with you again about the work that we're doing with the University of Arizona Applied Research Corporation at the refinery building at the bridges. For our newer regions and for those of you who haven't had a chance to visit the bridges, a reminder that the bridges is located south of the campus, our main campus in Tucson, and we lease approximately 65 acres to the UA Tech Park at the bridges to the Campus Research Corporation. And that master lease was approved by the board in 2020. The refinery building that you can see here on the slide is 120,000 square feet. It's a 4-story building that was constructed by the Boyer Company. And we have a 20-year lease for 15,000 square feet on the 4th floor. That is imagined for units that engage in highly specialized research and cybersecurity educational and research activities. And that lease will be with the University of Arizona Applied Research Corporation. We're using a sublease for this to maintain the underlying control of the space. It covers that entire floor and it will all be to Applied Research Corporation. It's a 5-year term with the possibility of 3 additional 5-year terms. So it aligns with our lease with Boyer for our 20-year term. And the University of Arizona Applied Research Corporation will pay the base rent plus any additional rent or other charges that may occur. And that is $62.75 per square foot, which is equal to what we're paying to Boyer. I'll stop there and ask if you have any questions about this sublease.
Thank you, Lisa. Any question from the board? Hear none. I move that the committee forward to the full board for approval the University of Arizona request to enter into a 5-year sublease with 3 subsequent 5-year renewals between the university and the University of Arizona Applied Research Corporation for approximately 15,000 square feet in the refinery at the U of A Tech Park at the bridges, as described in the executive summary. Is there a second?
Second.
Thank you. All in favor?
Aye.
Aye. Any opposed? Any abstentions? Motion carries. Thank you. Our next item is a review of each university's shares of their asset and liabilities under the Public Safety Personnel Retirement System, PSPRS. Lida McCollin will be presenting this item, and I believe that the CFOs from the university will also join on this. Lida.
Regent Mata chairs. Item number 8 is an annual review of the university's PSPRS plans, which is for campus police officers. So 4 years ago, statute was changed to require each governing board to annually review these plans. Subsequent to that, we also put this in our policy. So this is the 4th time that this had come before the board. The purpose is to look at unfunded liabilities, which the universities do have a plan to pay off by 2036. So one thing I would like to note about this, included in the governor's budget for the upcoming fiscal year is a plan to pay off every single state agency's unfunded liabilities, including the universities. However, if this is not funded, ASU does still plan to finance their unfunded liability, which the board approved at its November 2021 board meeting. So today, the committee is being asked to review and formally accept the assets and liabilities of each university's PSPRS plans.
Thank you. Any question, comments? I'm going to ask again. You have it? No. Okay. And thank you for being present here. I move that the committee forward to the full board for consideration and acceptance each university's share of the assets and liabilities under the Public Safety Personnel Retirement System, PSPRS, based on PSPRS June 30th, 2021 actuarial valuation reports for each university as described in the executive summary. Is there a second?
Second.
Thank you. All in favor? Aye. Aye. Any opposed? Any abstentions? Motion carries. Thank you so much. The next item is the review of cash balance pension plan. This is also an action item and is a review of an amendment to the cash balance pension plan. Lida will continue to brief on this, and the floor is yours, Lida.
Madam Chair, Regents, item number 9 is a review of the 7th Amendment to the cash balance pension plan. This deals with additional retirement for the university presidents and the ABOR executive director. And we are required by IRS to amend this document when contracts are changed, so the amounts and the definitions are the same in both documents. So today, the board office is requesting the committee forward this to the full board for approval.
Thank you. Do we have any questions by any regent? Hear none. I move that the committee forward to the full board for approval the 7th amendment to the cash balance pension plan as described in the executive summary. Is there a second?
Second.
Thank you. All in favor?
Aye.
Aye. Any opposed? Any abstention? Motion carries. Thank you, Lida. Our last item is the review of the 2nd amendment to Vice President Director of Athletics Employment Agreement from U of A. And President Robbins and David Wagner will be presenting this item. The floor is yours. President Robbins and David.
Thank you, Regent Mata. Can you hear me?
Yes.
Yes.
Good. Can you see me?
Yes.
Okay, so David Wagner, thank you for being there today. And I see Dave Hickey is streaming in here from San Antonio. We apologize that we're not there in person, but the university is proposing a 2-year extension with an increase of Dave Hickey's base salary to $875,000. This increase in base salary places Dave squarely amongst his peers, and just for context, his current base salary of $770,000 places him 38th out of 65th nationally and 6th out of 12 in the Pac-12. An increase to $875 would place him 35th overall and 5th in the Pac-12. And I'll just have to say, we'll make this brief and hopefully give you some time back, but I just want to thank Dave for all the service he has given over his 5 years of being at the university. And he started a few months before me and got everything all softened up and ready for me to go. And I think we've had a pretty good run. If you look objectively at the culture of the athletics department in terms of success in competition, but more importantly, I think in the classroom and what our students have done after finishing the U of A. Dave has the department going clearly in the right direction. Excuse me. Just a simple fact that he hired 5 new major coaches in the course of about 6 months last year is unheard of in any athletic department. So I just want to publicly acknowledge my appreciation for Dave and his strong work. Sorry.
Is any questions from any regions?
No questions,
No
just a
question.
comment. If
Yeah,
there's no
comment?
questions.
Yeah. Any comment? Chair Manson.
Thank you very much. I would just like to say that I am very appreciative of the job that Dave has done since he came to the U of A. I think he came and there were quite a few things that were in disarray and perhaps some fundamental ethics issues that needed to be addressed. And I am extraordinarily pleased with the job that he's done, the integrity that he's brought to the programs, and just really appreciate the work that you've done on behalf of the U of A.
Thank you. Any other comments? Here none, but I want to make sure we're missing Regent Penley and Regent Schumann. Are we still?
We have a quorum.
Yeah. So before we go to a motion, I would like with Director Dave Hickey to make any comments or any words to the board, since you have been very successful, and we're, not because I'm a Tucsonian, but the energy in Tucson is just amazing. And it's not that emotional, but yes, I would say that a lot of emotions is going through our city. Yeah. Dave.
Well, thank you, Regent Mata, and thank you to the Board of Regents and Dr. Robbins for the support and your supportive comments. It's an exciting time here. I'm incredibly appreciative of the opportunity to continue to serve the University of Arizona first and foremost, but our intercollegiate athletics program. It's really an honor and a privilege that I take very, very seriously. And our success wouldn't be what it is today, and it is a very exciting time without a great staff, an incredible body of coaches who believe in our mission of supporting those student athletes in their academic and athletic pursuits, all while constantly striving to do it in an excellent manner and making the University of Arizona and its athletics program a point of pride for this state. So thank you again. And again, it's a real privilege for me to be here today, and I appreciate the support.
Thank you. I move that the committee forward to the full board for approval the University of Arizona request for the Second Amendment multiple-year employment agreement for Vice President and Director of Athletics Dave Hickey, as described in the executive summary. Is there a second?
Second.
Thank you. Is there all in favor? Say aye.
Aye.
Aye. Any opposed? Any abstention? Motion carries. This is our last item, and adjourn. Thank you.